My framework is this is a long-term trend, right? We've got at least another decade in this, at least, probably 2 or 3 decades. But this part of it is going to continue to do very well. Sure, Bitcoin over time, as it gets more users, more adopted, it won't go up as much each cycle, but there'll be plenty of others and plenty of opportunities. So what we should be doing is using this, thinking of the money you've put in as your retirement money and writing it off. And then just adding, if you've got money in a bear market. Now, the problem is most of us don't in a recession. But a friend of mine taught me very early on, he said, Raoul, there's a key thing I've learned is he who has cash in a recession is king. So that's that combination of income and opportunity. You've got income, you've got some cash, and now everything's on fire sale prices. You're the king.
Hello and welcome to Money Talks. In today's video, Raoul Pal, the former hedge fund manager and Real Vision CEO, highlights the importance of buying Bitcoin at low price, holding it for a long-term duration, and not selling it in a bear market. Raoul also updates about the opportunity of growth amidst the financial crisis and incoming global recession, and how Bitcoin investment can be a massive boost to an investment portfolio. Make sure to stick around till the end of this video, where Raoul Pal explains the key principles that can guide us to thrive in these volatile environments. So, without wasting any time, let's dive right into the video.
So what I did is I bought in 2013, $200 per Bitcoin. It went up to
Whoa.
It went up to 1,000. Sorry, it went up to 1,000 in 6 weeks. I was like, oh my God. But I had a long-term thesis. I wrote the first kind of macro strategy paper about the valuation of Bitcoin. I thought this could be worth $1 million. And let's assume I'm an idiot by 90%. It's still worth 100 grand. So this is the best bet I've ever seen. So I held on. And then it fell 82%. And I'm like, wow. But I'd taken the bet and I put money in, was not levered, and I could afford to take the bet. So I just thought, I'm just going to forget about this and just see, because this is a longer term thing. And you don't normally make money that fast and it doesn't normally fall this fast. So let's just see. And then I kind of forgot about it, 2014. And then 2015 starts going up again. And then by 2017, I'm now mentally scarred from an 82% drop, coulda, woulda, shoulda. I then see confusion in the market about either we're going to fork Bitcoin to 2 different chains. The price is 2,000. I'm now up tenfold. I'm a genius. My macro bet has paid off, sort of. I sell out. It goes up to 20,000 in 3 months later, and I don't mind. I don't mind because I've made 10 times my money. What I did was deviate from my thesis. My thesis was this was a 10-year bet. And I took the money off the table within 5. And then I went back, and then obviously I bought back in June, May, something like that, 2020, and had a good run and put more money into it than I had originally in my original bet. And I worked out that I had, as opposed to just holding my original bet, I used a theoretical number. So I think it was, if you put 10 grand into that first bet, it would have been worth 1.4 million.
Whoa.
By doing the right thing, buying reasonably low and selling reasonably high, and timing the market. That was a small fraction. It was, in fact, I think I made 20% of what I would have meant if I held on. And then I went back and looked at, okay, well, what did I actually do? Because I massively increased my position in June. I still underperformed by 5x. And then I'm like, okay, what happens if I'd done the right thing? What I should have done, which was my framework, which was you buy it when it's on sale, when there's blood in the streets. So I went back and looked at the bottoms of the bear market, assumed I'm an idiot and I can't catch the bottom of the bear market and miss it by 30%. And just put the same amount in each time that I started with. That 1.4 million would have been 30.
Whoa.
Sorry, not 30, sorry, 3.
I was going to say, good Lord.
Had I rolled my profits in, had I just doubled down each time or whatever, the numbers go exponentially larger. And that really stopped me in my tracks. It's like, here's me doing the right thing, buying when it's in a bull market, selling when it's in a too strong a bull market, buying when it's down a bit. And I still didn't do as well as just holding it.
Bitcoin was sliding back toward the crucial pivot point of $30,000 after a brief rally earlier this week to about $31,700. The largest cryptocurrency was recently changing hands around $30,100, down 3.1% on the day. Ether, the second largest cryptocurrency by market value, was down 1.4% to $1,788. Analysts in both crypto and traditional markets were looking ahead at the likely outcome of the European Central Bank's monetary policy meeting. It's possible central banks beyond the U.S. Federal Reserve might start to hold sway over markets. As central banks outside the region start to raise interest rates, theoretically making their fixed income assets more attractive to yield-seeking investors, they make their currencies more attractive. That could have implications for Bitcoin because its price is usually denominated in dollars, and the trend often coincides with moves in the greenback versus major regional currencies.
If you were lucky enough, like you and I, to have bought slightly earlier in the cycle, then for goodness sake, don't look at your loss of wealth from peak. That's stupid. That's the American dream, fixating on something that doesn't exist. Think, okay, fine. I'm still in, I'm probably still up. Don't think, oh, my net worth's down 50%, this is the end of the world. No, that's not how it works. How it works is you need to be in it to win it. And you can't be in it to win it if you've got leverage or if you're out of the market. And so if you say to me, well, that's difficult for people, sure, then put less in. It's as simple as that. You get to the point where you can sleep at night, then you've got the right size bet. And once you have made money and it's compounded, then don't look at it from the peak to trough. So one of the tricks I've learned with myself in a slightly different thing is wine. I love wine, and good wine is expensive, but it's a lot cheaper if you buy it early, when it comes out. So I bought, and I've just taken a delivery of stuff I bought 15 years ago. Now, what I do is this little mental trick, which is I write off everything I pay for wine when I buy it, because I don't see the wine for 15 years, so why do I care?
Whoa.
And so mentally, it's gone to zero. So now I'm able to drink wine, which I would never open because I haven't paid for it. I wrote it off. And it's really helpful to use mental tricks on yourself to stop yourself doing things you shouldn't be doing, which is selling at the low, buying at the high, or buying a bunch of wine and then not being able to drink it. And you actually buy it to drink it. I don't sell wine, but if I did, I would have just sold all my wine. I've never have tasted amazing wines. It's these mental tricks we have to play.
The Wall Street firm Morgan Stanley says crypto is getting hit by shrinking liquidity. Weakness in crypto markets, the failure of a dollar stablecoin, and a reduction in leverage in decentralized finance, or DeFi, are resulting in the crypto equivalent of quantitative tightening, Morgan Stanley, or MS, said in a report. The recent collapse of stablecoin Terra USD saw Tether lose its dollar peg intraday, and this caused crypto prices to drop further as some question the stability of the third largest cryptocurrency, the bank said. Investors are redeeming USDT at a record pace, the bank said. Some 10.6 billion of redemptions occurred in the last month alone, while other stablecoin issuance is not rising. Systemic spillover risks from the crypto market to the fiat banking system appear limited, the bank said, because the leveraged crypto companies usually borrow from each other. However, if USDT follows materially under its $1 peg, this would have a larger negative impact on crypto and risk markets.
Get it?
Yeah, and write off the investments I've got in crypto. And then I observe the sentiment, I observe the sirens, I hear the song, but they don't affect me. Well, they obviously do affect you, but you you try not to let it affect you as much. You distance yourself from price action because your theory is that it's going to go from here to a lot further over time. That keyword is over time. And we've all of us have said, and we know it does this a lot on the way. So then if you know that it's a known, why the hell when it happens, do people forget? It's so funny when Bitcoin and ETH crashed last year, fell 55% from the high. I spoke to my wife and I'm like, God, everybody's freaking out, And she's like, why, what's happened? I said, well, it's down 50%. She said, but you said that's normal. And her exact words, so just shut the fuck up. You should be buying here, not freaking out. I'm like, yeah, true.
According to data from CoinGlass, the most recent rally came at the expense of traders who had positioned themselves for more selling in both Bitcoin and Ethereum derivatives. Notably, the price spike for major coins today happened as news emerged that Bitcoin miners have started selling off coins that were previously hoarded in an attempt to cover operating costs. Miners transferred about BTC 195,663 to exchanges in May, marking the biggest monthly increase since January, per Bloomberg. At an average monthly price of USD 32,000 per coin, the value of the Bitcoin sent to exchanges is USD 6.3 billion. However, Bitcoin miner Riot Blockchain has been stockpiling Bitcoin on a bet that prices would keep appreciating.
Let's look at other opportunities. So maybe not everybody likes crypto. Another thing that is patently obvious is technology is not going away. Now, it's not easy to pick the right technology stocks, much like it's difficult to pick the right NFTs or tokens unless you really know what you're doing or you know that particular company or that project. But if the thesis is that technology is going to continue to have this ridiculous adoption, whether it's AI, EV, whether it's robotics, whether it's genetic sciences, all of these things that are around us, space travel, well then if it's being sold in a fire sale because everybody's panicking, well, surely that makes sense because technology has outperformed the market for the last 40 years. So you always want to be buying technology. So if you're thinking of your 401k, you're in your 30s, you look at your 401k and you've still got your income, because that's the most important thing of everything. You've got your income, you should be going, okay, I should be buying technology stocks and I should be buying crypto because these are long-term megatrends.
So, do you think Bitcoin investment can help us thrive in these volatile markets? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.